Hi, my name's Felix Medd. I'm the head of the R&D and Innovation Tax Relief team at TC Group, and we're here today to talk a little bit about R&D tax credits, the qualifying criteria, and the impact of inquiries on the sector as a whole. HMRC are opening more inquiries because a number of years ago they noted that there was significant error and fraud, in their own words, within the SME R&D tax credit scheme. This was centred at the time on a smaller number of industries, but also on a view that many companies were claiming more widely than perhaps the legislation was intended to allow. As a result, HMRC increased the person power of the R&D tax credits team, or the R&D compliance team, I should say, and also brought on the campaigns and projects team from HMRC in order to increase their capacity for volume compliance approach. And this has meant that the rate of compliance checks has gone up from low single-digit percentages in the early 2020s to, as of last year, I believe, around the 25% of SME claims being checked. So to provide some statistics behind the change or the results of the HMRC volume compliance process, in the 21-22 period, HMRC estimated that around 25.8% of SME claims were deemed to be erroneous or fraudulent, and in fact they deemed that 50% of all claims in the period were actually non-compliant, either in part or in full, which suggests that 50% of all claims had some reduction at least in value, suggesting that there were miscalculations of the value of those claims at the very least. By contrast, in the 23-24 period, we're still sitting at around 17% of claims being checked by HMRC. However, despite this raise in the volume compliance approach, £0.6 billion were still deemed to be given away in error or fraudulent claims, suggesting that there is still some scope early on in 2025 for HMRC to continue the volume compliance approach. I think it's fair to say that there's been an impact on the well-being of many business owners as a result of the increased number of inquiries, simply because for many business owners, an inquiry from HMRC regarding their R&D tax credits will be the first interaction that they will have had with an inspector from the revenue. And this can be quite a stressful experience, and it can be one that can have an adverse effect on their mental health and well-being. And it's important in those situations they quickly speak to an advisor who's experienced in inquiry defence and can explain that often the tack that HMRC take in these situations is the norm. They're not being singled out, and in fact an inquiry is a compliance check. There's no implication of wrongdoing. It's HMRC ensuring that the claim is watertight and above board. However, the phrasing of these letters don't always give that away early on, and as a result, it can have a negative effect on the well-being of clients. I'm now going to run through several of the most common arguments HMRC use during an inquiry process and steps companies can take to respond to those. Either it's not a legitimate advance or a technological uncertainty. So fundamentally, this is subject to the opinion of the competent professional. In my view, the best way to overcome the argument of it's not a legitimate advance or it's not a legitimate uncertainty is to reiterate the qualifications and/or experience of the competent professional who led the project, and then provide a statement from that competent professional underlining why, in their opinion, the project sought either a legitimate advance or an uncertainty, depending on the objection from HMRC. And in fact, HMRC inspector guidance does state that when the opinion of the competent professional is given, unless there are exceptional circumstances, it should be taken as valid. So, provided one meets this standard, this should overcome this objection. Additionally, at the end of a process, companies will often be asked if they'd read and understood the entirety of the Corporate Intangibles Manual for R&D. Instead, one should rely on advisors to provide insight on a top-level definition such as a scientific advance or technological uncertainty, and then to provide guidance on the more nuanced elements that a company doesn't need to have read and understood in their entirety. Another common argument from HMRC is that the advance is a commercial advance done for commercial purposes. The best way to counter the commercial advance argument is simply to focus on the scientific and technological knowledge or capability that is sought to be advanced in the project. Whether the project will be profitable in future, the potential scope for commercialization is not relevant to its eligibility for R&D tax credit relief. Fundamentally, the problem with this argument is it does imply that any project done for commercial purposes would not be eligible for R&D tax credits, which would, I suppose, disqualify all or almost all of all R&D eligible projects done in the entire country. As a result, one should focus on detailing the scientific and technological advance rather than trying to explain that a project was not done for a commercial benefit. The majority of projects are undertaken, of course, with a commercial benefit in mind. The key point of emphasis from HMRC in this question is to guide companies to provide details of the scientific knowledge or technological capability that is being advanced.
A third common argument is that it's trial and error testing and not R&D.
The best way to demonstrate that a scientific method was applied in a project and that it was not simply random trial and error testing is by documenting the project from start to finish. Preferably this is done at every significant stage of a project when key uncertainties are overcome. Furthermore, when any testing or product analysis is undertaken, it's very important to record the parameters of those tests. So duration, pass and fail rates, any other statistics one can provide to show HMRC that this has been a pre-planned and regimented approach to analysing the progress on a project thus far.
The fourth reason we often hear is that these are technical challenges and not technological uncertainties.
Technical challenges is not, in fact, defined within the R&D legislation, and any time this argument is encountered in the course of an inquiry, one should focus on demonstrating that legitimate technological uncertainties have been encountered. Fundamentally, this will come via the opinion of a competent professional on the project itself. So often statements from said competent professional can really well evidence the company's position for this. This is an important question to address if it comes up in an inquiry because fundamentally to qualify for R&D tax credits, technological uncertainties must have been overcome or sought to have been overcome. So whether or not that's been done successfully, legitimate technological uncertainties need to have been encountered. Therefore, if this argument crops up, it is really critical to ensure that you state the case to HMRC that they aren't technical challenges, they are legitimate technological uncertainties per the R&D guidelines. So what are my top tips when a company is considering making a claim for R&D tax credits? Evidence and timelines are really important information to keep in the current climate when considering claiming for R&D. First and foremost, it is a key point of focus from HMRC if they should open an inquiry. And it is also important because it can justify any costs that are claimed in the period. For example, the involvement of key members of staff. And if a timeline can demonstrate those staff were involved at certain key points throughout the period, then their percentage time allocation or a justification in comparison to their timesheets is much easier to evidence. So record keeping should focus on key uncertainties that were overcome in the period or encountered. Also at the start of a project, an analysis from the project lead, the competent professional on the current state of technology or knowledge across the wider sector. This will all give HMRC a snapshot of where a company was, where the state of technology more widely was before a project was started, which then allows them to understand how that project has sought to advance that state of technology. Pre-notification is a relatively new requirement introduced by HMRC. For this, companies may be encountering this for the first time now. And essentially that means that in many cases, a company must notify HMRC of their intent to claim R&D tax credits no more than 6 months after the end of their accounting period. Now, there are exceptions. Not all companies do need to complete a pre-notification, but as if one is required and a company does not complete it, it renders them ineligible to claim R&D. It is always best to check with an advisor whether this will be necessary. QIA is an area of cost categories that's often not correctly claimed for when companies are seeking R&D. It refers to qualifying indirect activity. In short, what that means is companies will often identify key members of staff that are working on a project, a lead designer or head engineer, for example. What they won't account for is the indirect activity without which the project would not be able to move forwards, but it is not necessarily directly related to overcoming a particular uncertainty. Now, advisors will always be able to guide companies in identifying key areas of indirect activity. It's critical to involve your technical staff when recording information in preparation for an R&D claim. Fundamentally, the definition of R&D starts with the opinion of a competent professional. Therefore, the views of a project lead, a competent professional, someone with key qualifications or a history of working in the field successfully, should be recorded at the start point of a project and should be able to identify the key uncertainties that are expected to be encountered or were encountered in the pursuit of an advance. To summarize my top tips, companies should ensure they are keeping detailed records and timelines of the projects while they are underway, to also use and rely on the advice of an advisor such as TC Group, and to ensure that they are aware of the pre-notification period 6 months after a year end, and check with an advisor whether this will be necessary. So the next step for a company considering claiming R&D tax credits is to request an initial consultation with TC Group regarding their potential R&D claim. Getting started with your R&D claim. So an initial consultation with TC Group will involve a high-level outlining of the R&D guidelines so that all clients have a good understanding of what the key criteria for qualifying activity is, followed by a more detailed discussion about potential projects should a client wish to continue with an R&D claim. We will also outline areas of qualifying costs such as direct and QIA, qualifying indirect activity, that one can look to recoup should R&D tax credits be eligible. TC Group can assist clients in preparing robust R&D claims, firstly prior to any projects being undertaken by advising on which projects a company is considering which may be potentially eligible, and on what record keeping can be done in order to maximize the amount of information that can be provided at a later date. Secondly, we lead the clients through a series of technical and financial meetings to identify key qualifying technical information, as well as the qualifying costs that will be compiled into the final tax calculations. Finally, any submissions go through a detailed review process, both on the technical and financial elements of a claim, to ensure that all the information HMRC would request during the initial stages of an inquiry has been provided, and to ensure that a report will detail all the technical information in a clear and concise manner in accordance with the guidelines. TC Group can also engage with HMRC on behalf of our clients. If this is done regarding one of the claims submitted through TC Group, this is also done at no additional cost in order to ensure that our clients can be as secure as possible in their confidence regarding their R&D tax credits claim. A previous client was actually involved in an HMRC inquiry who specialised in the recycling of ferrous metals from furnace ash. Now, this client had been undergoing an inquiry for in excess of 9 months when we started advising, and we were able to resolve the issue following a teleconference with HMRC. Now, using our expertise in inquiry defence, we're able to sit down and prepare them for the likely questions and objections that would be raised on the teleconference, and after a thorough discussion with senior investigators from HMRC, the case was resolved with no reduction in claim value. Thank you for listening. I hope the information provided has been helpful, and if you'd like more information or to discuss potentially eligible R&D projects, contact us at TC Group.